Hello everyone, on this non-farm Friday. Today we had, no other ways to say it, really a blowout number. Expected was about, the consensus between about 120 and 140,000 jobs created, and we actually got 243,000 jobs created, with the unemployment rate ticking down from 8.5 to 8.3. So, it's a pretty massively good day for the markets, and in terms of risk appetite, it really just came on the table. As you can just see in a snapshot really of the yield curve we got here, we got June 12, the Schatz, Bobble and Bund. The Euribors, well, they came off the highs as you would expect. Schatz has been playing around in this range. It doesn't look like much is happening, but the Bobble and the Bund is where all the action took place, and we had a massive curve steepening over the longer term. As you can see, the Bund is actually down 82 ticks at the moment, 83. The Bobble is down 33, and the Schatz is positive for the day. So you can see the massive divergence of activity through different parts of the curve. But today, looking at the TED spread, this is on a 5-minute chart, and this is what happened today. Over this week, we actually had a massive run up in Euribors, especially this front month. I don't know what actually pushed it, and it was the most annoying thing, because I actually went short a level that I thought was good, but I actually got stopped out at the high as I couldn't take any more pain. But lo and behold, the moment I got stopped out is the moment it came back down again, and now we're just at a bit more, 100% 75. 100% 25 basis point cut is priced in, and it looked like they were even pricing in a 50 basis point cut during the week, as things were going through about Greece, this PSI deal and this and that, and there's a whole bunch of rubbish that we hear every day normally. So today in the TED, off the morning, we had a sell-off in those Euribors, and that in turn led to the spread coming off from a high of 22, which we got to the previous night, all the way down to 14s and 15s. And since then, we've pretty much just traded sideways and traded in a very tight 2-tick range. Even on non-farm, we had a nice pop up to 8.5, but it was a good opportunity to short, and we've come back off. But if we look at on a longer term, you can see this TED has been very volatile really, and it's all on the back of the Schatz just being so stuck where it is that it's just not moving freely. Hence, whatever the Euribor is doing is what the TED seems to be doing. And as you can see, this move up that we've had over the past week is from the strong run up in the Euribor, whilst the Schatz has stayed stagnant. So we've actually gone up from 87.95 over the last week and this week, all the way up to 22. So that is over a 30-tick move in the TED, and it's been pretty violent. It's pretty difficult, and looking back over where this TED seems to be categorized in terms of levels, as you can see, there's a strong level around 87, 81, and a top side of between 93 and 95, and that is, if the further back we go, that is pretty much give or take a little bit over here. It actually goes down to 76 further down, but that's the sort of range that we've been trading in. And then these bands have been holding pretty well in terms of when it does break out, it tends to break out into another band, and then you sort of know what to do in the next level. And so the first band is, lately it's been 81 to about 93, 95. The second band, as you can see, is from 95 to 7.5, so that's a 12-tick range. So if we go here, this is where we had the breakout above 93, 95. Then we sort of consolidated in this sort of range, which was a range a month back, and then after that we broke out again, and the next range after that is the 7.5s and 15s. So we stuck to once we traded in that, came back into this 7.5, 95 range, another breakout, broke out, tested 8s, back above, and now this week we've formed a new range and a new high, which is now between 15 and 22. So it seems that roughly, especially these last two ranges, are about 7.5 ticks each. So it's tough to tell what's going to happen now, but it all depends on what's happening with the Euribor. And looking forward, we're either going to basically test this 22 again, so we're at the bottom of this range, or if we break through this range, we're going to go test back to 7.5 again. So in the short term anyway, I'll be expecting it to trade between 7.5 and 22, but I'll be preferring to just trade purely around these extremes, as playing in the middle, too susceptible to a breakout. But yeah, that's it for today. We'll see how it turns out next week, especially with this non-farm payrolls. If we continue to get good data next week, we could keep on getting a drop off in Euribors, which will in turn lead to a drop off in these spreads. So, if I was a betting man, which in theory I am, I'll be looking to looking to short if it breaks through this, and I'll be looking to short 14s or 15s. So we'll go back to 7.5. But if we consolidate above this 15 level, then again, I'll look to short around 22s, if anything. Alright, till next week, have a good weekend.